As always, at this time on Mondays, we host a market update. The best thing is just to follow us on YouTube and Facebook. Put on the little alarm bell so you get notifications when we go live and you can join us. My name is Alejandro Zambrano, and what we're gonna do next is taking a look at the big markets, stock indices, cryptocurrencies, Euro USD, and gold, and a few other markets. If you do have any questions, you can just pop them in the chat and we can answer them live. So before we start though, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. So bear that in mind. As well, I'm gonna give you my personal opinion. Now, I've been doing this for many years, since 2006 to be exact, and I'm a highly profitable trader, but just because I'm an expert doesn't mean that I don't have losses. I think the key here for my success, find something that works and stick with your money management rules. If you do that, the wins come because they usually come, and because you're sticking to money management rules, so you don't lose too much on a single individual trade, you don't get burned up, okay? Because usually if you do blow up, it's because people don't manage the risk properly. So what happened last week? All right, so let's take a look at this. I think the interesting bit here is really what happened with the New Zealand Central Bank. So they cut rates from 4.75 to 4.25, so that's 50 basis points. And as far as I understand, the outlook remains bearish, so even more cuts. That means if we can, I would prefer to sell the New Zealand dollar versus the USD. So fundamentals suggest lower New Zealand dollar versus the USD. Now we already know that because look what's going on here. So over the weekend, President Trump, or President-elect President Trump, he said that, I'm just going to read it out here, the idea that BRICS countries are trying to move away from the dollar while we stand by and watch is over. Will require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 500% tariffs. So what's been happening, and it's actually quite normal, is that all the business, like a lot of these emerging markets, is happening in dollars. They don't want to operate in, say, South African rand. You don't want to get paid in South African rand, and they don't want to, for example, charge even. They just don't want to use it. To give you an idea, right? Why? Because high inflation, high moves, but what they're all trying to do is they're trying to get together and maybe create a currency that wouldn't require dollars. Now, this is going to happen anyway, a long run, as the US loses its dominance. Which is fully normal because there's so many of these countries catching up and populations in these countries are like huge. Now, of course, it's not great for the US dollar because they have huge debt. It's similar to what we're seeing in Europe, by the way, which means that it's important that people trust the dollar. But now they're putting these potential tariffs on, which is the reason why the dollar is up today and the reason why gold is down as well, because of these tariffs. So we're going back to trade wars. So I understand why they want to protect the US dollar. And of course, because the US is still such a big player and a lot of the things that the emerging markets countries produce go to the US, they can do this and actually, change things. And there's other reasons as well. When Russia and the Ukraine war started, Russia found itself locked out from the SWIFT system, the international banking system, so they had to create their own. And it was difficult for them to get hold of their reserves and so on. So they realized that if they're not playing along with the US, they could get locked out. And that's another reason. And I think most likely at one point there will be some sort of replacement, but now they're trying to stop that. That's big news. So we'll see how that plays out, okay? But that's sort of what's influencing the markets today. And just in general, when people, if they would increase tariffs here, it would boost the dollar. And it's the same thing I've been saying for months here on this weekly market update. So I want to continue and reiterate that that I'm long-term bullish dollar because of tariffs, because of the rate cuts they want to increase, because of the deregulation. Okay, usually when a country does good and increases their speed, the growth rate, that would increase the value of their currency. And as well, at one point, if they do indeed introduce tariffs, what's going to happen is they're going to have inflation. So when you have inflation, you can't cut rates, and when you can't cut rates, well, then at that point, your currency gains even more. And that's going to be really interesting because the dollar is already gaining a lot, right? So if the dollar gains with 20% and then they increase tariffs by 20, well, because your currency is now stronger, you don't care about the tariffs because it just nullifies the tariffs. So that's just economics 101, and it will be very interesting to see, because last time, if you were trading that, then there was a really interesting, some of the comments that were being said from, say, President Trump, because it's just economics when things are the way they are. But we'll see. Yeah, so overall, I'm pro dollar, bullish stock markets, bullish crypto. Nothing really has changed, I would say. The only thing that sort of changed a little bit, I think, is this. So for last week, we had Tokyo Consumer Price Index coming in at 2.2 versus 2% anticipated, and higher than the 1.8 prior. And headline inflation in Tokyo as well was higher. I think it was 2.6. So I think this is really the only interesting piece of news, plus this, of what happened last week. That was out of the norm. And what happened here is that the yen strengthened, and the probability of having a rate cut now of 25 basis points is roughly 60% at the December rate meeting in Japan. So what can we look forward to this week? So there's going to be a lot of economic data, so you can definitely trade around these events. So you have the ISM manufacturing PMI today at 3 p.m. London time, and then I would say the ADP numbers on Wednesday are really interesting as well, and the ISM services on the same day. And then come Friday, and we have opportunities to trade the Canadian dollar and the US dollar because of the non-farm payrolls. Now, everybody asks me, Alex, what do you think about the non-farm payrolls? Well, the problem with the non-farm payrolls is that it's very, very hard to say if it's going to be up, if it's going to be down. But we do know that labor market numbers have come down quite sharply, and that if they would be negative, which I don't think they would be, because the jobless claims have been really good in recent weeks, and ADP as well has been okay. The problem with the non-farm payrolls is that they adjust the data, and they don't ask enough people to get a proper estimate. So what happens is that they effectively get like this random number. That's why everybody always goes for the average. If you look at all the professional economists, they make way more money than me. They always just look for the average because they have no clue really. And I don't blame them, because the government goes in and they put seasonal effects on it, which you can also predict to some extent, but it just becomes really difficult. But what can we say? What doesn't change like massively up or massively down from a day-to-day basis? The unemployment rate. The unemployment rate remains at low levels, 4.1% last time I checked. And I think that's really what's interesting. If the labor market comes in strong, and last week core inflation was at 2.3% annually. So if that comes in as expected, then there's no major reason for the Fed to do many major changes. Will still cut, and they will cut slowly. And then if tariffs are introduced, if these massive tax cuts are introduced, there's going to be a stop to that. The bond market had already reacted massively on the idea that Trump is going to win, which he did. So I think there's no major play right now, unless for some reason US economic activity goes down. But look, this is also not going to happen. You know why? Because companies in Europe and in the US, what are they doing right now when tariffs may come in? They're buying ahead. So they're looking to buy, maybe, I don't know exactly how it works, but say instead of buying 1 month of supply, maybe they'll buy 2 months or 3 months. I'm speculating now. It depends on every industry, but they're buying ahead of things. So if anything, the PMIs across the world will increase now, particularly in Europe, just because the US companies are putting orders in to avoid these tariffs, to some extent mitigate them. So realistically, stock market's up, dollar down, gold down, and crypto up. So let's take a look at the charts. All right, so this is Euro USD. So as you know, this is the most recent chart. I've been bearish from 109 on the election night. In fact, I've been bearish from already up here, 110. But we're bearish on the election night. We did a live stream here on YouTube, and that worked out really good. The market just plummeted. But last week what happened is that the market just needed to correct a bit, which makes perfect sense. Now, the idea was to sell here at 104.50 with a stop loss of 105.50, so about 100 pip stop loss. Now, the market went straight through here, went straight up, would have been stopped out. But when we look at this from a big picture perspective, because we just need to accept defeat here, we need to understand that, okay, look at this daily chart. You got resistance here at 106.26. So this is still a vital and important level. The reason why we got stopped out here is that we got too close to price. And the reason for going too close to price is because if we don't go too close to price, for example, we would have missed many of these opportunities here. So this is the same thing that happened here. But looking at it from a big picture perspective, I think people are going to be bearish between 105.89 and 106.26, and in general we just look to sell. If it pushes above here, we might go up to 107.22, 108, but I would be mighty surprised if we trade above the high here from the US election night. I would be very surprised, but that's where we have the stop loss. So this is the S&P 500. So 2 weeks ago we said look to buy here. That worked really fine, and then when we did the market update last week, we're trading here. Now, we didn't go low enough to be able to buy. The market just went straight up and hit the take profit from 2 weeks ago. Now, this is my chart the way it looked like on Friday. And I would argue with the seasonality, normally the market just gains a lot in December. Not a lot, but it's usually bullish December, January, February, March. And then afterwards it gets choppy and you really want to avoid it, the markets. So I'm gonna insist on being bullish, and I want to be bullish between 5,999 and 5,958. What you can also look here, if you notice, is that you got a double top, 1, 2. If you measure from the low to the high, you get that target. So you're looking at a significant move on a break to 60.30, beyond my target here. And remember what I've been saying recently. When you have a Republican president, Republican Senate, Republican House, the market would gain usually 13% on average. So again, I would look to buy dips because next year we can be closer to 7,000. How about gold? So we were looking at the markets we're trading here when we did the last weekly update. Now what happened was that the market dropped sharply, and the reason for that is quite straightforward. Is because the Fed, not the Fed, because it was a ceasefire between Israel and Hezbollah, and gold took a big hit on that. So we would have been stopped out here. For looking at this today, I would say I will continue to be bullish above 2,613, targeting at 2,662 and 2,678. The big problem though right now is the fact that we're in a big range. It's not like it was before. As you know, I've been bullish on this for ages and ages, very successfully so. But there's the all-time high up here, and then you have this swing low here. And we're probably gonna trade sideways within this range for 2-3 weeks until the market figures out if it wants to totally collapse and join Euro USD, which I think is more likely than anything else, or if we're gonna have, you know, more sort of tension and maybe inflation pushing this to the upside. Even though, again, with inflation, if it would pick up, it would be bad for gold, I think. Oil prices as well, like they're consolidating. Very boring right now, but boring is usually very good in the long run. So whenever we breach 70.16, we can have an 8% slide. You definitely want to keep an eye on that. The alternative would be we break this high at 72.89. Break here, we can go up with 6.8%. Now here's crypto, here's Bitcoin. So last week we said buy here. So we're trading around here. We said look to buy between 9. We didn't say actually look to buy. We said people will buy possibly here, because we don't give trade recommendations. But the idea was to buy here from 94 all the way down to 90, more or less. The stop was at 80. And you can see here we bottomed out nicely. Okay, we bottomed out nicely and we had a massive push. You could have bought Bitcoin, or you could have bought like altcoins. It was a real strong move. Not necessarily here because it was just a small move to the upside, but if you look at some of the altcoins, they're down like 30, 50, 40%, some even more. So now we're back here. What's happening? Well, last week we were trying to push to the upside. That didn't work. And then when we look at this today, you can see that we're stuck in a big triangle. Well, not big, but a triangle, which makes sense. You know, we gain very sharply. People are sitting on some big fat profits. Sorry. Yeah, on big profits. I think what's happening here is that people are just consolidating. So there are actually 3 game plans here. The safest one, with risk of missing out, is if we trade down to the trend line and around to the low seen last week. Around here would be very bullish, either Bitcoin or the alts, for this to go up. If you don't want to miss out, then you're just looking at 94.647. So this is what's happening today. So if we hold above here, we can push up again. The third option, which is also, I would argue, quite safe, if we can say trading is safe, would be a break to 98. If we break 98, this triangle is going to trigger, and at that point the triangle suggests we can go to 105. See, there's 3 different options and they're all bullish. Can we have a bigger slide at one point? Yes, we can. Like Trump is, you know, mentioning and having different comments. I don't think he's gonna say nothing bad about crypto, but you know, something may happen. I'm not sure, but I don't think so. But I think overall, yeah, we want to continue to be bullish. Okay, let's see if you have any questions. I'm gonna jump on YouTube. That's where there's usually activity. Okay, so no questions, that's all good. If you do have any questions throughout the week, just let me know. Let's just check out Facebook. Nothing there either. Okay, that's all good. If you do like this stuff, don't forget to give it a like. If you have any feedback at all, just let me know. I'm here to help. Thank you and happy trading.